나를 바꾸고 싶어. 넌 모두가 나를 알아봤으면 해.
Welcome to IPO Kitchen, where our chefs serve up fresh analysis on upcoming IPOs and SPACs, hot off the grill. Be sure to follow us on YouTube and TikTok and visit our website at ipokitchen.com for more exclusive content. Today we're going to discuss this week's Webtoon Entertainment IPO and give you our candid opinion. The company is offering 15 million shares on the NASDAQ at an indicated price range of $18 to $21. This would give them a valuation around $2.5 billion at the midpoint. Webtoon Entertainment is being spun off from the Korean search engine giant Naver, which is retaining over 62% of the voting power. Goldman Sachs, Morgan Stanley, JP Morgan, and Evercore Group are the lead underwriters for the offering. The company operates a global storytelling platform that spans across genres such as manga, fantasy, romance, and science fiction. The content's in the form of bite-sized serialized segments designed to convert casual users into paying customers. You can access the first few episodes for free, but if you want to continue reading the story, then you need to buy a subscription. It's a younger mobile-focused audience. 75% of visitors are Gen Z or millennials, and 60% are women. Webtoon has over 55 million titles in their catalog and monetizes them by adapting them into other formats such as films, streaming series, games, merchandise, and books. They claim their platform is as sticky as the molasses we use in our entrees. Visitors spend between 30 and 120 minutes a day on the site, which compares favorably to popular social media websites such as Facebook and X, or Twitter as it used to be known. The company began life as a separate division of Naver in 2004. Once they started monetizing their platform, sales really took off, climbing from around 17 million US dollars in 2013 to 1.69 billion in 2022. If you're not a math major, that's an 87-fold increase in less than 10 years. Over the years, the company's made a number of acquisitions to expand their user base, and now includes properties such as Line Manga, eBook Japan, and Wattpad. Their main competition includes Kakao, WeWan, a subsidiary of Tencent, China Literature, Tappytoon, Leshin Entertainment, Sidewalk Group, Mr. Blue, and a number of smaller companies. The market's very concentrated, with the top 5 companies accounting for about 50% of the global market. Due to rising digital media consumption, the global webtoons market is forecast to grow at a compound average growth rate of 20 to 40% per year over the next 5 to 10 years, depending on who you believe. The pandemic, with its lockdowns, led to a period of hypergrowth in the industry, but there are signs that the market's now slowing down in Korea and Japan. So many of the companies are looking abroad for further growth. We think, therefore, that these estimates may be just a touch too optimistic. Case in point, the company's growth has slowed in recent quarters. Over the past 2 years, growth in monthly average users and monthly paying users has flatlined. In fiscal year 2023, for example, revenues grew just 22% on a constant currency basis. And this slowed down further in the third quarter last year to around 14%. The deceleration is partially attributable to cuts in their marketing and advertising spend. This goosed the results and allowed them to show a net profit and positive EBITDA and operating cash flow for the first time in their history, conveniently enough right before the IPO. However, as they seek growth abroad to make up for stagnant home markets, we think it'll be very difficult for them to penetrate new markets and grow their revenue while maintaining profitability. The company has around a 70% share of the North American market, but internationally, only 1.5% of their users pay for content versus around 15% in Korea and 10% in Japan. At the time of the listing, Webtoon Entertainment had a price sales ratio of 1.93 and an EV to revenue ratio of 1.56. While these multiples seem reasonable on the surface, it's not possible to draw a true comparison since there are no direct competitors trading on a major US exchange. The closest comp might be Bilibili, but that's kind of like comparing apples to oranges, since Bilibili shifted its focus from animation, comics, and games to video sharing a couple years ago. We think the IPO has several things going for it. An A-list of underwriters, a solid 180-day lockup period for major investors in the executive management team, and it's the only way to invest in the global Webtoons market on a major US exchange. If you're a short-term trader and can get in around the IPO price, we think it's worth grabbing some shares, if only to flip them. We're not as sold on it as a longer-term investment. We think it fails to check the boxes for both growth and value investors due to the recent declining sales growth along with the dubious predictive value of the recent profitability going forward. As it's always easier to upsell to an existing customer base than to land and expand, we think the company will need to resume its previous levels of marketing and advertising spending. We won't be surprised if this IPO bolts from the gates, but expect that entropy will eventually take over and a better entry point will present itself as the market waits to see how successful they are at boosting their revenue growth abroad while maintaining profitability. If you're a long-term investor, we'd stay on the sidelines for now and wait before jumping in. Thank you for watching this video. If it was helpful, please be sure to follow us on YouTube and TikTok and visit IPOkitchen.com for more exclusive interviews and candid analysis on IPOs and SPACs.